Yeah, it's done.
Okay. So understanding profitability. Now, understanding profitability means we all are here to do this business of making profits. Now, is it a result of all our action, or is it the goal of all our actions? Now that needs to be decided. A lot of us do business as and when it comes up. So somebody is ordering something, somebody is saying something, then we will say, okay, I will supply to you, I will send you the goods. This is how it has to be done then. But is it kept that this much profit is what I want to earn? This is what is my goal post. From there, how do I make it? Whom should I supply? What kind of pricing should I do? What kind of costing should I do? That is the way you should run the business. The first goal post in your business is profit, and from that goal all the sub goals come. How much sales you have to do, how much purchase you have to do, how do you plan to pay your suppliers, how do you plan to pay your expenses, employees, rent, electricity, everything. But the first goal is to make profit. Now let us see how. See, we have been taught that revenue minus expenditure is profit. If the expenditure is more and the revenue is less, then it is loss. We are not here to look at the loss, but we are here to look at how we can make profit. Now, how do you break each part of your business to understand which area or which needs more focus, or which area needs some development or improvement? Okay, again, every time when you review your business, our general tendency is we do not review our business at all. It is going, it is happening every day. We wake up, we go to our office, we start working, some client is coming, we are attending to the client, and then we are servicing the client, we are coming back home. Next day something else comes up, we're trying to service the client, and then we come back home. We are not generally in assessment of how much we have made this month, how much we have not made this month, why, what is the reasoning, where we are lacking. So that continuous review needs to be done. I will tell you how that can be done and how it needs to be done also. But general tendency is we go to office, we come back home thinking that we are doing a good operations in our business. Unless we assess that, we really do not know whether it is worth all the effort and the time that we are putting in the business. So assessment of business is very important. Simple as assessment of your child. When your child is in class 1, 2, 3, 4, every year annual report comes. Similarly, a business also has an annual report, whether you have performed well or you have not perform well. So we'll focus on the annual report also. First thing is understanding profitability. Profit is a goal. Profit is not a result of your action. You cannot wait for it till everything happens. You should keep it in the top of your mind and then start working towards your business. You see, the way you will operate your business itself will be completely different once you keep that profit as your goal post. Yeah. How many of you agree with this? You can reply in chat. That there is a difference in perception in with which we do business. We believe that profit is a result of our action, but we should consider profit as a goalpost of our actions. Perfect, Priya. Thank you. Perfect. Guys, I seriously understand, because 99% of us believe that sales, improving the sales funnel and everything is only a, what do you say, goalpost of our business. But the fundamental goalpost is, see, we are working so hard. Okay. Why we are working hard? We're working hard so that we can take home something for our children. Make sure we improve our business. Next year, it should scale up to a larger level. But all that can be done only if we have profit as our goalpost. Yeah. So let's see. Next, there are two levels of profitability. Whenever you think of profit, you should break it down to two levels, because what happens, there is one set of challenges that we have at one level. There is another set of challenge. Okay, we have another level. Before, the one set is at the gross profit level, the second set of challenges after the gross profit level. Now when you look at that, okay, when you look at that, what happens is, when you look at that, there are two. I'm sorry, I'm just sorry, got deviated here. Yeah. Let's say there is a steel plant, manufacturing, Salem steel plant. I'm just giving you random examples here. The gross profit is the sales that they make out of selling the steel finished products minus the cost of materials, the processing cost, and the factory expenses. So somebody who's into manufacturing, for them, the production cost along with the raw material cost is the cost of goods so produced. Some selling expenses are there, but that's okay. Along with that, that sales minus processing cost and cost of materials, gross margins. Suppose at this level itself, if your production cost is very high, okay, then you don't make profits at this level itself. Apart from this, after this, you have the administrative expenses, the selling expenses, the interest cost, and other things. So the profits can need necessarily. See, we've read in books, everything happens, but when we look at the business per se, somebody is into, let's say, cloud computing services. If I'm hiring that space and I'm leasing that space, the difference between the hiring cost and the selling cost is my gross margins. After this gross margins, I need some employees to manage all this uh, what do you call space. If I employ some employees and I need to market that I'm having a cloud computing services, okay, I'm just randomly saying, then you should first, at the first level, say you should have a margin there. Second level, after meeting all your expenses. Similarly, in trading concern, let's say there is a silk trade. See, we all know there are popular stores. So some popular store is there, like Puri, Sarna stores, like anything it could be. Sales, obviously, yes, minus cost of the product, the purchase value, for the purchase value of the ready-made garment, then direct materials like freight, packaging material. The difference between all this is the gross margins. Suppose you buy at a very high cost and you have very thin margins. Let us say you have 2%, 3% margin, then your volume should be substantially high. There are low cost. See, if you say discount sellers, like if people are from Chennai, then it will be like, in Jayachandran text stores. What happens in the Jayachandran stores? The product is available at a very low price. How is it possible for them? They have large volume of sales, but that may not be available at the same price in your store next door. He is not able to sell at that price because his volume is not very high. So every business model needs to understand what is the gross margin they want to have in their business, along with the volume they can sell. So it's a value volume game. If you have high volume, you can have thinner margins so that you can meet all your expenses. But if you have very less volume and you need to make some money, then some pricing has to be done accordingly so that you make some gross margins. And similarly, let us say in the service sector employees are key cost. Technology, employee, marketing are the three key costs. In that, if you look at it, fees paid, for example, Arvind High Hospital, their fees paid to doctors, cost of medical medicine and consumables required for the treatment of the patient. Now these two are important aspects to be considered on the gross margin. At this level, are you making profit? First, at this level, every company, every business has to make profit. If we are not making profit, or if we are having a very low margin at this level, then there is something that we need to work on: the product, the volume, the pricing. The second part of the business is after the manufacturing, the gross margins. You have administrative expenses, employee cost, finance cost, marketing expenses. Marketing expenses like newspaper ads, then Instagram, Facebook ads, or digital ads, either offline or online media. Finance cost, if you have borrowed money to run the business, then you incur finance cost. Employee cost, administrative employee. See, in the factory setup, what happens? You have production employees. That's a separate thing altogether. But you have administrative employees to administer your or manage your operations. These administrative employees, no, they are not directly related to sales, though you have some kind of relationship with sales, but consider them as a fixed expense independent of sale. This month there is lower sales, still same salary needs to be paid. This month there is higher sales, still the same salary needs to be paid. That is a kind of your employee cost at the administrative level. Then administrative expenses like traveling, printing and stationery, those are the kind of administrative expenses. My humble request to all of you is visualize your business. What are the things that are direct cost to your business? Where is the cost, after which are you making margin. If you are making margin, are you able to meet out your expenses? Now the people who are in the startup stage, let us say this is always a challenge. It's like a chicken and the egg story. Okay, first I need to spend on marketing, first I need to spend on this thing, then only I will get returns. Now all you have to do is do a kind of test marketing. Okay, uh, if you spend so much, what kind of result you get? If you spend so much on your employee, is there an efficiency? Is, see, the major part of an entrepreneur is the time. If he or she has a time, then he or she can think how to grow the business. So if suppose, let us say, there is one department that is always having a challenge, and you need to always focus in that department and work on that, then is a person who, or a replacement of a person who can handle that, not, will that bring you time to focus on all the departments? Well, for an entrepreneur, time is the most crucial thing. Even before, I would say money is not as much, but for an entrepreneur, time is as important as that, because that gives you the direction to think, that space to think. So if you are able to get that time and you have to pay a cost for it, please get that time. Now, understand, for a startup, all these challenges are there. But then what is a startup? Startup is something that you have to try new, whether your customer will accept it or not. That is the first test that you need to do. If your customer doesn't accept it, then you are not there. That is not what he wants. That's not the pain point that you're trying to solve. At lower pricing, he is accepting it. At higher pricing, he is accepting it or not. Like this, you need to check a different pricing whether it happens. What is the marketing through which you can reach a large audience, if that happens? So startup journey itself is like this. It takes 2 years for you to settle. Let us say 2 years, you should know where you are and whether you are heading in the right direction. After that, it should scale up. So have those timelines. Within 3 months, this is what is the experiment I'm going to do. If this experiment works out, then I'm going to progress in this direction. If experiment doesn't work out, then I'm going to carry out the next experiment. Startups have to be more strategic, because they don't have the leeway. For them, cash is always a constraint. Either people are not there, the entrepreneur has to do a lot of stuff on their own. So with considering all that, you have to take that measured goals, action plans for three. Every quarter you should assess yourself and say, because time flies like anything. So considering that, take your steps accordingly and move forward. Now, what I said can be visually considered this way. Sales is the most important funnel here. From the sales, whatever is the cost of goods sold, if you deduct, you will get the gross profit. After gross profit, business expenses, whatever administrative, employee, uh, interest, then taxes, and then net profit. Any queries here so far? Any queries so far? If you can reply on the chat, we got it.
So far, it's understandable, ma'am. Thank you.
Yeah. Thank you. Thank you. Thank you so much. Good to go. Now let's say, now you understand that these are all there. Okay. Then what is the plan? How do you think you should get a grip over things? Things should not go out of your control, out of, or should be haywire. Budgeting is the most important, most effective tool for improving your profits. So now, first thing what we said is profit is your goal post. Okay. Now to materialize that profit, one of the most effective tool is budgeting. Let us say you have a birthday party at home. What do you do when you have a birthday party at home? You plan how many guests will come, what kind of dishes you want to make, what kind of cake you want to order, what color does your child like. So some planning goes for a birthday party. Agree or not? Please message in your chat so that I know you're in sync with what I'm trying to tell you. Yes, we do plan. When does birthday party happen? Once in a year? Or let's say you have, even all the family members celebrate, 4 to 5 or 6 family members 6 times in a year maximum. Yeah. If it is a joint family, it could be a little more, but otherwise, when you're looking at a nuclear family with parents, then it is almost 6 times. For a birthday party, we plan. Then why not for our business, which is our day-to-day affair, which is where the bread and butter comes from? So it is all the more important that you plan and you chalk out what you're going to do in the next 3 months, next 6 months, next 1 year, and then take action accordingly. It gives the focus and the goal towards your action. That's why I said review is need to be done. But without budgeting, what kind of review will you do? So you need to first budget. What happens with budget is you can actually give some responsibility to a couple of people in your organization also. Say, I'm looking at this is a budget, this is what I'm planning to do this year, this is the expense layout. Within this expense layout, you need to work out all these activities in the business. Even for marketing, let us say we understand that marketing is a very important aspect in the business. You have to spend for marketing before even you can earn the revenues. How much can I experiment with? 5K this month? Can I experiment with 10K next month? Depending on the response, I will take the next call. So you need to adopt budgets. You need to see whether your actuals have been in line with the budgets. See, we all have budgets. Every year, New Year resolution. Okay, January comes, there is a New Year resolution. But do we do an actual review? Every month on month, we should be doing a review, right? I took a resolution that I will not get angry, but next day itself I got angry. That's a different thing altogether. But then, did I review it? If I start reviewing, will I not focus on my goal? I wanted a profit of 5 lakh, 15 lakh, 20 lakh, 1 crore, whatever it is this year. Now, am I reviewing it monthly to reach that goal post? It's as simple as it. This is the most important discipline. For all those who said that finance is a challenge, fun, there's no fun. But if you review, you can actually make it, and it's as simple as that. You understand this month it's not been great. What should I do? Change the course, correct the actions, make the course corrections. Once you make the course correction, you will see some improvement. From there, the next step, then there is improvement. From there, the next step, then there is an improvement. That's how you can reach your goal post. Doing the same thing again and again will not lead to your goal post unless you know this is the formula that has worked for all of us. Yeah. So let us take corrective actions. Let us make people accountable. In fact, I'll tell you, it is as simple as that. People really become accountable when they are given a budget. You need to have 5 clients. You need to service so much. Then your focus is how to bring them. What kind of activity should you do to bring that into materialization? Now, so we have understood so far. One, profit is the most important goal in the business. Second, there are 2 levels at which you should look at profit. One is the gross margin level, and the second is the net margin, not net profit level. Third is what we saw is budgeting. Budgeting is the most important tool to help you drive towards your profits. Now, now I have profit in the business. So most of us feel that we have profit in the business. What is the next thing that you think we should take care of? Or is having profit alone? I can see I made a sale and everything. Having profit makes it easy or smooth for business. How many of you agree on this? I'm just awaiting your responses. Does having profit make it smooth and easy for the business? Agree. Perfect. Yes, Priya. Prabhu also says he's agreeing. Yes. Not always. Okay. Kaiza has something in her mind. We should ask her. Yeah. Kalevani? But we'll look further improvement. Perfect. Profit plays a vital role. Yes. So profit plays a vital role, but let's understand what is profitability. I made a sale of 1 lakh today. The cost of goods sold was for around, what do you call, 50,000. So I will say I made 50,000. Okay. But let us say this 1 lakh sale, I will get the collection after 3 months, and I have to make the 50,000 today. Payment today. Now, where do I go? What should I do? So, this transaction will give me profit. Not only, it's a very good profit making transaction. If you say on a sale of 1 lakh, I'm having, Pancodi. Okay. So, when I'm having a challenge where the collection will come some other day and the payment has to be made on one day, then I know that there is a cash flow mismatch. So cash flow also have to be handled well in the business. So for those who are telling me that finance is challenge to handle, it's not finance that's challenge to handle. You managing your cash flow and you have not able to forecast your cash flows, that makes it challenging to handle it in the business. Once you have the clarity, I made a sale, I will get collection only 5 days later, 10 days later, everything, then we will know that this is how my cash flow is going to be. So profits are different from cash flow. What? How? Because profit can, the day you materialize your profit is the day of your cash flow. As simple as that. It's a simple example. A hotel profit and loss account looks like this, okay, where it says 5 lakh is the sale that they have made, indirect expense, admin expense, and everything. So they made a profit of around 38,750. Okay, but what happened? The collection of 3 lakh rupees is going to come after 1 month or something like that. Okay, 2 lakh. Okay, only 2 lakh is available today. Then what happens? You are having a shortage of around 3 lakh 46,000. You have some other loans and repayment of loans and everything that is happening here. But you understand, this is practical scenario. You may have sale, you may have profit, but cash flows are not sufficient. In such cases, what you should do is again same simple formula, plan your cash flows ahead in advance. You know that this payment is not going to come today. You need to make sure that you have to manage your expenses. Either you reduce your outflow or you make sure you make your collection faster by offering some discount or something. Now, to manage your cash flows, there are a couple of important things that we need to take care. Yes, Kalani, credit limit is an important aspect. We need to take care. Now there is a loan. Okay, all this will come to later. One thing is this cash flow crunch can be because first thing, profits are very low in the business. Okay, in spite of having no, because the profits are very low, the management of cash flow becomes a challenge. You should be able to churn your cash flows much faster. Second one is, if at all you have made an investment which is still not giving you that kind of cash flow or the return, then you have a cash flow problem. Okay, startups, then is this a challenge for you? Is this a place where you feel you have a challenge? Share in the chat. Yes, I have a challenge in handling cash flows. I need to improve in handling cash flows. If you feel that yes, this is a place where I feel that I'm not able to manage it well. I need to pump in my own money time and again in the business. Share in the chat so that it becomes much easier for me to take it forward for you. Are you able to handle your cash flows well? Yeah. So I guess everybody is able to handle your cash flows well. If yes, no, no, something. Yeah, I have challenge. I'm able to handle. Beautiful. So Kaiza is able to say that she is able to handle the cash flow well. So this is where you should reach. One, scaling up or growth or sales is a challenge. Two, profitability. Two, managing the cash flow is a challenge. Now let us say the next part. How do you handle some cash flows? Some of us, just to give one mirroring, okay, how it happens in the household. Household, what happens? We have an income of around 50,000. This month we thought it is a month of Pongal, so we will have a chit, we'll withdraw a chit that we had been depositing 20,000. I'm just taking these numbers, very simple numbers, but I'm just taking these numbers so that I understand the inflow and outflow impact of cash flows. Okay, so total inflow we are expecting is around 70,000. The vendor is, we are due to the vendor by 7,500. There is an EMI commitment. There's a home loan that we have had. So there's an EMI commitment. Rent, electricity, water, tuition fee, driver salary, whatever is your operational expenses that are required to sustain your lifestyle, that is around 30,000. Mutual fund investment of around 5,000 and study table and chair for children 15,000. Now this is your planned outlay for the current month. Now, not necessarily everything will go as per plan. Something may not materialize. If it does not materialize, then we have a challenge. Now, let's say household income instead of 50,000, it is only 40,000. Chit, you could withdraw only 15,000. Now, what do you think you should do? Which expense should be paid first? Yes, participants. What do you think? Which expense should be paid first? You have rent, electricity, salary, you have the vendor payments, you have the bank EMIs. Okay, somebody is saying EMI, and then we have the mutual funds, we have the study table and chair. Which expense need to be met first? Yes, Kezia. Banks and vendors. Okay. Kalyani? Deepa, you can also answer. Anita, you can also answer. It will help me help you. Yeah? Tuition fees. Perfect. Okay. Related to kids. Okay. Okay, so what happens? We all have our priorities. Now, this priority is some kind of, this is where the challenge is, determining what is priority at what point in time. Now, first thing we should understand is we need to operate. We cannot have disturbances in operation. If you don't pay rent, electricity, and operational salary, all those things, you have a challenge. Your first priority will be rent, electricity, tuition fees, etc. The next priority, as you say, will be your EMI, because if you do not honor the EMI, then you have a challenge. Interest will increase, then your reputation is at stake, nobody will lend you further. Then after this, what do you think you should do? Assets, vendors, or mutual funds? Whether it's at what to drop because you don't have the cash flow, or what to pay. Yes, Kaiza, you're right. So we need to pay the vendors next. Okay. We have to, because again we have to buy from them, right? Next month supply, so we need to buy from them. Then assets can be deferred because only tea table can be purchased. Investment in mutual fund will be a next part of the exercise. Now, when you have such kind of cash flow in your business where the cash flows are not able to meet the planned outlay, then you need to prioritize. Okay, what do you think we did there? It was simple. It's a household management of funds. Same thing can be applied in business. Assuming that 4 lakh is cash sales, collection from debtors is going to be 1 lakh 50,000. Okay, collection from debtors is 1 lakh. EMI is of 1 lakh 25. I'm just replicating the entire aspect in such a way. It's almost like a household. This is the most fun part of the finance activity. How you manage your household. Sometimes you make the grocery vendor happy by paying early, and then you extend timeline, and then you make sure that you are again honoring them, and then you take your day-to-day commitments. Similarly, a business needs to be handled. It's not very, very complex. It's very, very simple if you understand that all the stakeholders have to be met. If you have a bank loan, then yes, you have to honor the commitments. You can't escape from honoring the commitments. If you have suppliers, yes, you have to honor the suppliers so that they give you quality goods and there is some satisfaction that you have from their suppliers. If you have employees, they need to be paid on time so that they continue working with you and they give you the best of your deliverables. So each and every stakeholder, as far as payment is concerned, needs to be honored well. Now, suppose let us say collection and sales. Okay, these are important aspects because you know you have sold, but that cash has to come today or this month. Now, for that to happen, what will you do? You will follow up on your collections. Now, is your follow up system right or not? That you need to understand whether you are actually lacking. See, some of us know what we do. Oh, where will the party go? We will raise the invoice later. First thing, we will raise the invoice later itself. No, then there is a challenge. You raise the invoice immediately, then you will have the follow-up mechanism so that you can get the collections. Small tip, every 30 days, like Kalevani said, there has to be a credit period that we need to fix because we also need to operate our businesses. So when you fix the credit period, you will understand, yes, this needs to be received by that time. If we have not received by that time, I will personally follow up and get things done. So cash, sales, collection from debtors, all needs to be managed well. So if you're able to manage these two, then you know the next part is how to prioritize which kind of expenses. So prioritizing is the most important part of your cash flow management. One, operating expenses. Second, loan commitments, vendor or capex or vendor, depending on what kind of stage your business is and what is your current need and how flexible your suppliers are. And then comes investments. What happens, some businesses, no, they have a seasonal cash flow. Let's say Diwali means they will get huge cash flows. Retail businesses, for example, Pongal means they will have huge cash flows. When you have that kind of cash flows, you should save during those months for the months which are lean, or you should save during those months for your growth investments. So you need to plan it out that way. I hope you're clear. So assess your inflows, what kind of your inflows you're, again, managing your cash flow, simple thing, you need to prepare a budget. What is your cash flow budget? PL is one part of the entire thing. Cash flow is the second part of the thing. Whether PL and cash flow will match or there will be a difference between that. If there is a difference, how do you manage the shortage of cash flows? Banks are ready to give shortage to cover shortage of funds, provided you give them collateral, or your friends, family, short-term funds, those. But you need to understand which month I will have lack of funds or when should I borrow. It cannot be an everyday affair. The next month I go borrow, the third month I go borrow, and all that thing. It cannot be an everyday affair. So you should understand that this is how your business is going to be, and you will not borrow any further. You will make sure that your cash flows are streamlined. And then, okay, borrowing is acceptable when there is a growth and scalability that you can look forward. And second thing you should understand is, if you borrow, then there is a commitment of interest payment. Will you be able to honor that commitment of interest or EMI payment with your cash flow that you are generating? If you are sufficiently cushioned, there is a margin of safety, then it's not an issue. But be very, 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 there is a very thin line of balance. You think you will be able to do it, but then it becomes a challenge. So you should be very cautious and careful while taking that approach. In fact, when we worked on turnarounds, right, what we used to do is weekly we used to monitor the cash inflow and outflow. Weekly, how much cash flow we are expecting, how much we can spend, what are the priorities for that week, what are the priorities for the next week. So that level of weekly cash flows we used to monitor. Okay. So far what we have seen is, one, profitability. Profit is the most important goal of the business. Second part is, budgeting is a very important tool that helps you monitor profitability. Third part is cash flows. Cash flow is the difference in the timing between profit that is shown in the book or that we know that will happen and the time that it gets materialized as cash flow. So cash collection minus cash payments. So that is as simple as that, cash flow, and it can be mirrored to your household cash flows. Today, what is the income you're having? What is the credit that you're getting in your bank? And then what is the payments that you're going to do and what kind of prioritizing you're doing at home? Similarly, it can be managed at your workplace too. And when you are managing that, you need to understand prioritizing is the most important for payments, collection and sales. There is a follow-up that is required and a credit period that needs to be fixed. As simple. I hope you got it. So just give me a reply through chat. I got it. If you're clear with whatsoever has been explained to make the finance a simple affair, just say I got it. IGT. Great. Thanks, Kaiza. Okay, one thing will happen. If you say I didn't get it, no, then I have to rerun through the presentation. That is even more challenging for you. But then it helps me understand that you're still here. It's fine. Then we'll proceed further. No issues, Kalevani. You can get in touch with us. You have our numbers, so you can get in touch with us. Yeah. Good. So now when you look at it, okay. So now cash flows are the second. Now, after doing all this, I'm getting a cash flow. I'm able to honor my commitments. Now, considering this, what is it that makes us help us assess our performance? There's something that, I am doing sales, I have expenses, I'm making some money, I feel. What I made sufficient? How do you understand that? For that, there is a concept called return on investment. Yes. What is return? I'm as important as profit and cash flow. Why is it important? Now, to understand that, let's understand what is return on investment. Return on investment is simple. It is profit divided by the amount you have invested in your business. We will see that through an example also. It's like an annual report for your business. I already told an annual report is important and compulsory for any business. Let's say you have a cash, or you have a bank balance of around 10 lakhs. What can you do with the 10 lakhs? You can put the 10 lakhs simply in your bank account and it will give you interest, 5%, 7%, whatever is the FD interest, you will get that interest. Okay. But not now what you did, you decided that you want to do a business, which means first you are risking your capital. Yes. Then you are adding your hard work to it. Time and effort is being added, not only yours, your employees, everybody's time and effort is added to this business. Now, do you think you should still make the 5 or 7% in the what you get in the FD, or do you think you should make more? What kind of returns would you expect from your business? I'm expecting a reply in the chat. Will you be happy if you make 5% from your entire investment of 10 lakhs if you put it in your business? Bank is giving 5%, correct? Will you be happy? More is expected. Perfect. More is expected. Why more is expected? Because you're risking your capital, you're putting your hard work, time and effort, energy, everything goes into this business. Now let us say how much more. It could be 7%, it could be 12%, it could be 15%, depending on your business. Now suppose you borrowed money. Okay. Then how much do you expect? I didn't have that 10 lakh rupees. I borrowed it from my men. Beautiful. The purpose of the business is to make better profit, and out of that better profit, how much have I invested is my bottom line. I make 5 lakh a month. I will show you. I'll show you the next thing also, Prabhu. Yes, the purpose of the business is to make profit vis-a-vis the investment made in the business, time and effort. So if you're borrowed, then the borrowing cost, let us say bank is lending you at 10%, 8%, whatever, your business has to make more returns than that 8 or 9%, 10%, so that you will be having something left in your hand for all the time, effort and energy that you put in the business. Prabhu, you rightly said, just take this example. There are two business units, Alan Solly and Van Musen franchisee. These are just for the namesake. I'm just taking them as an example. Both units are making 5 lakh profit. Are both units performance same? No. Kaizen says no. Both are making 5 lakh. No. Kaiza, I'm sorry. This one is also making 5 lakh profit. The other one is also making 5 lakh profit. It depends on other factors. That would differ with profit margin premium. No, I am still making 5 lakh rupees. Profit margin can be 40% in this business, 30% in the other business. But still I'm making 5 lakh rupee end of the month in rupee times. I'm making that. Okay, the major difference comes when what is the investment I made in this? 40 lakh rupee investment. Some amount in stock, some amount in furniture fixtures, some amount as brand deposit or whatever it is. I made an investment of 40 lakhs. I made 5 lakh profit. So 40 lakh investment, 5 lakh profit. The return on investment is 12%. It is also called as rate of return. Then there is another business, Van Musen. I invested 50 lakhs in this because the brand deposit was 10 lakhs more in this. So I made 50 lakhs. Now, what is your return on investment or rate of, which is more effective now? The rate of return of 12% and the rate of return of 10%, 12.5% is more effective. This is like the final benchmark, okay? Final benchmark where you want to see, yes, Alan Solly franchise is doing better. where you want, what is the return on it? I have 10 lakh in hand. I can keep it in fixed deposits, as simple as that. But if I don't keep it in fixed deposit, then I should make more money. If I put it in my own business, then am I making more money than that 5%, 7% post tax that I earn from the fixed deposit? It's as simple as that. Now you understand finance is difficult or easy? Easy, right? I put 40 lakhs in my business. I should make at least 5% on that business, which is at least 2 lakh rupees a year. Let us say I make 10 lakh rupees. Then I'm making a good amount of business. As simple as this. Very simple, simple, simple. Okay, the balance has got, Alan Soley is doing better, right?
That's right, ma'am. The doing better has to be on the lower side. Like the
Okay,
weightage has to be on the
okay, 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 okay. Got it, Prabhu. Yeah. So if you look at it now, the return on investment is the final benchmark for any business. If you look at all the listed companies, the last thing, what is the ROCE, ROE, what is the price earnings ratio? So why that price earnings ratio? So if I pay 5 rupees for purchasing the shares and the share earns 3 rupees per share, then I know what is the kind of return on investment it is. So everything will boil down to return on investment. It is not difficult to compute. You should compute it once in a year. Let us say financial year, you take it from March to April, compute it once in a year. We don't do it practically. Most of us do not do it. But if you do it, you will assess and you will look forward for further growth. If an investor comes into your business, or you want an investor to come to your business, you should give him returns, right? There should be some rate of return that needs to be offered to him, that my business has the capability to earn 18% return on investment, so you invest in my business. But how? Only if you do an assessment, you will know. So every time you need to assess your business with real fact, figures and numbers, so that you understand where you're standing and where you can move forward. So these are the three key things that you should take care when you are doing this business. I have some examples, but I would like to skip because I have something else to take care here. Yeah. Now let us say this is very important part, because this is where the implementation of all these three lies. You are going to take a decision today. What will be the impact of that decision? A current credit policy to customers has been changed from 30 days to 10 days. So a customer who was paying you in 30 days, now you're telling him that you please pay me in 10 days. Now, what is the impact of this decision? Since we are few of us, it could be through chat, or you can unmute yourself and also speak. But then that has a challenge, because we don't know who's going to speak what time. What is the impact of this policy or this change in your business? Earlier you were receiving the collection, and it's a huge decision, correct? So what is the impact? It's a huge decision that you need to take. What will be the impact of this decision? Pressure on inflow management. Perfect. Now let us say your supplier demands immediate payment. Okay, your supplier is demanding immediate payment, and that's why you want to change the credit policy to the customers from 30 days to 10 days. Will you not do it? Will you be not forced to do it? Reputation of the company? Absolutely. So now the impact of this decision is, one, you can get collections earlier. Okay. Two, you may have to offer discounts. Some customers may not be able to pay you on that time. If you're still having the capital to survive this 30 days, then you will continue with that customers. Otherwise, you will not continue with the customers. So when you look at it, am I going to make profit through the transaction? Is my decision going to help me in my cash flows? Whether there will be return on investment that needs to be taken into consideration. What kind of return on investment will I make through this decision? Is everybody clear on this now? One, any decision that you take has threefold impact in your business. One, what is the profit in the transaction? What is the cash flow that you're going impact that is going to be due to this transaction? And what is going to be the return on investment? Buying new furniture and server for office at 46,000 on spot cash. So first thing is spot cash means immediately cash outflow is there. That's the most important the decision that you're taking. Second, this furniture and server will help you service your customer better, and because of your ability to service your customer better, faster, your deliverables, you will be able to serve more customers or your sales will improve. Or that will not happen, my existing furniture has gone out, I'm just replacing it. That could also be one of the thing, which means there will be no impact on your future profitability or return on profitability, but your return on investment will get what do you say, reduced, because your investment amount is going to increase in your business. So like this, every decision, these are all small decisions, okay, not that it's going to be a major decision only that needs to be analyzed, but all small decisions, like you are returning a defective material supplied by a supplier for 5,000 rupees. It's a small decision. What can happen because of this? Your payment 5,000 gets reduced, but if you return this to suppliers often, then you have a challenge, then you might have to look for another supplier. So sir, every decision in your business has an impact, and it could be a long term impact too. So there are multiple things that I wanted to share with you here. I'm just giving all these for an example, but any decision that you take in your business has to be looked from the perspective whether I'm going to make profit in this transaction, what kind of cash flow, yeah, what kind of cash flow. I hope you are all comfortable with the pace. I have very little to discuss from here. Please just kindly hold on. I think it's 12 and about 12, 12:10. I hope you're all comfortable. Yes? Okay, thank you, guys. Yeah, yeah. Okay, just a couple of minutes more. So each of the decisions. So sometimes what happens, advertising. This is something like, this month, this year, especially, we are feeling that there's no much of business. We need to spend something on advertising. But how much do we need to spend? Our competitor is spending in lakhs and crores. Can we afford that? We cannot afford that. What can we afford? How much can we afford? And how much will be the impact on our sales and pricing? That we should understand, practically understand, and not just because a competitor is doing it, we need to copy and do it. What our pocket allows us to do is what you can or you should do. Very important, otherwise we lose focus from our business and it goes on to the competitor. Both the business is lost as well as the money is lost here. A lot of times it happens, it's not that once or twice, a lot of times it happens because the competitor is doing, we are giving a discount, people have lost money in that place. So it is always better to be sensible, saying that I can deliver this, I can satisfy my customer, and hence I am charging this. Uh, Dicey situations most of the time, but still you need to handle it. Otherwise, without profit, where are you? Your goal post is profit, right? So in order to achieve that goal post, what are the things that you need to do and how you are going to achieve that? That is the trajectory that you are going to lay. Now you understand there are hundreds of decisions that you take in a month, or almost all our decisions will have some financial implication or other. When you want to take the right decision, then you need some guidelines. Yes, whether my decision is right. So to have that guideline, just ask yourself these three questions. First, am I making profit? Is there a cash flow impact due to this transaction? What kind of cash flow impact is there? What is the return on investment that you're going to? If you ask these three questions, I think it will become much easier for you to take the decisions. What kind of, obviously, setting go profit as a goal will also help you take decisions in such a way that no, this will not help me in achieving my goal. Let me not go by this decision. Instead, I can tweak this decision this way and move ahead in my goal. Okay, so decision making is the most important part in your business, and this is how you can handle finances in your business. I hope I am clear. Now I had a crossword play, but before we go ahead with this crossword, okay, I have something to share. Srinyasan, can you just share the screen of the upcoming,
Yeah,
you
I'll do
know,
that now.
yeah,
Just give me a few moments.
yeah. I hope you all like the session so far. We'll play the crossword puzzle also now. What I'm suggesting is today, today we are all there and we understand the finances. But all this needs to be understood in a little more detailing to implement it faster. You've heard this, okay? You've heard what I'm telling you. These are the macro frameworks, but somewhere when you're doing your costing, let us say, you feel that no, I need some support here, or you feel that this place is where I am not able to take track of, or my customers are not willing to pay pricing beyond this. This is where I'm stuck, or my process needs to be established so that I know my pricing well. Finally, all your decisions, HR decision, marketing decision, process, or administrative decisions, all these decisions have an impact on finances, and you need to understand why and how these needs to be taken care of.
Is my screen visible?
Yeah, visible, Shreyas.
Yeah.
So what we have designed here is a master class. Okay, basically it's an 8-hour program. Each session will be an hour program, post which an exercise will be given to you. Based on your business, you have to complete that exercise and then come for the next session. When you're prepared for the next session, there's another concept that is unfolded and you have to implement that same in your business. So it is an 8-hour program for 4 weeks, 2 weekends each. Each weekend it will be a 2-hour program. So each day it will be a 2-hour program. Will help you understand the concept that you need to understand to manage your finances in the business. Shreya, moves to the next screen. Why we don't get involved in finance? Because we don't feel it is fun to be with, and we feel that numbers are very complicated, the tax part is very challenging, we don't know how to do, whether accounting and finance is same, accounting is different, accounts don't come up on time, so we are having a challenge. Then what are the steps that we should take? What are the MIS we should create for our business to know that our finances are running well? What are the next steps you should take towards growth? You have come to one stage where you have a customer inflow, customer outflow, cash flow is going good, but you want to grow further, right? Your brand has to be a larger brand. You should be able to service more customers. Then there is a challenge. If I have to do that, then I have to plow money. How much money should I be able to plow? How I'll be successful in that part of the venture? What is the difference between business and passion? You should do everything passionately, but you should monitor what you are doing. Every bit of your action decision has to be monitored, whether it is giving the desired result or not. Now, to do all this, we will connect all these in that master class through each module. So one module will be that. Next, Jason.
Yeah. No, we don't have the module details here. This is about which one?
If you can show the module details.
Yeah, I'll do.
So each module will be taken. The first one will be basics of finance and accounting. The second one will be basics of cash flow, how cash flow needs to be structured, what kind of cash flows are there. This cash flow, what we saw now, in this we will see what are operational items. When you need to take the decision to move that operational item into capital expenditure item, what is a working capital, how do you need to handle working capital, when these approaches are given in your own business, okay, in your own business, then it will throw light into where you can improve upon. Finally, everybody is, all of us are in the journey of improving ourselves, you, me, everybody. My endeavor is to make sure that women are capable and confident enough of handling finances. We should not feel that it is a challenge at all. It's as simple as cooking. It's as simple as any other art or skill that you have acquired. You are a technologist, you feel the technology is a very easy thing, it has nothing to do, it's really challenging. Similarly, finance is also nothing big. It's a very simple thing, and we should be able to handle our finances. So what my expectation, or what my you have seen this session today, okay? Yeah, so this is the structure, basis of finance, capital structure, how you can market your product globally, because now with Corona, we should understand that this is how it's going to be. How do you choose an investor? What is a transaction? At transaction level, when you're going to take that big jump leap, what kind of assessment you should do? And if it is an investor coming in, what kind of decision making criteria you should have? Disruption and competition obviously always will be there, how you will handle it. and technical. You will present end of the entire masterclass. A case will be given to you, and you need to present your own case to make sure that you are ready for the next stage of growth. This is my endeavor in the entire program. The program pricing is around 15,000 rupees. It's an perfectly structured program where your business will be taken into consideration. You will be handheld. You will be given solutions that this can be done, this cannot be done, this shouldn't be done, this will lead to these challenges, and how you, it's more of an advisory. Implementation will be from your side. Once you see that implementation get through, you will understand that it has given you big benefits. Now, we have been advising clients for the last 15 years on aspects of finances, how they should handle finances, how they can manage their cash flows, whether the management of cash flows will give them the desired return or not. Or when we have been advising, we find that there are some common mistakes people do. We will help you understand those common mistakes, and you can avoid those common mistakes. The entire program is designed for the participants is to ensure that they improve in their finances. So for all of you who want to have that, it's only an investment of, for you it's a 15-day investment, 2 weekends, 2 hours each, but you have some assignments to go through. So I put it as 15-day investment for you, but 15-day investment can give you lifelong resulting benefits. Now you consider yourself in a stage where you have to scale up your business, then you please take this program. It will help you understand your business nuances better, handling your finances better. You will never ever have a challenge of handling your finances ever after this program. You need to implement what has been suggested in the program and get things going. For all the interested participants, all you have to do is, the program pricing is 15,000 rupees, but now it's been slashed to 11,000 rupees for an 8-hour technical session, along with guidance on how you need to, you will, because you will be sharing your assignments or sharing your, what do you call, workshop material. You will be given feedback on how you can improve at respective places. I think this is like, most flexible program that you can ever get on your business. Even if you go to institutes like IIM or this thing, it's a very generic program. They leave upon you to take whatever you want. Here we help you implement whatever has been structured in the program. So just take in cash on this opportunity, take care. And then if all of you who are interested in the program, just message Srinivasan through WhatsApp, or in the group you are already there, message and take it forward. Yeah. Now, proceeding to the crossword puzzle. I need to share screen, right?
Yeah, yeah.
Now, here comes the next thing. You can money you will get on sale and purchase of good. What is it? One down. You can reply in chat. We will see what is the answer that you're getting. It's a very exciting game because we have seen all these terminologies in the entire session. Just to wrap this session, I thought this game will be of help to you. Money that you will get by sale and purchase of goods. You can reply in the chat. I will place it there. Transaction. Money you will get. That money, what money is called as? Sale and purchase of good is a transaction. What is the money? What is it that you get? It's a margin money. Basically, it's a cash inflow, correct? It's a margin, gross margins, basically, or gross profit, correct? Yeah? Okay, the next one. An amount of money that is same each month you pay. An expense item which is same. What do you call it as? It's same each one you pay. Second. It has how many? 12 letters. Yes, Keiza. It's called as recurring or fixed expenses. These fixed expenses are recurring in nature. Perfect. Next, difference between total current asset and total current liability. Current asset means the receivables and stock. Basically, current liability is supplier payment. The difference between these two is called as, it has 14 letters. It's called as working capital. The difference between the current asset and the current liability is called as working capital. The next way, the activity within a bank account, either deposit or transfer or withdrawal. Now this is very simple. It's a bank with a bank account. Whatever you do, an activity, what is it called as? Perfect. Transaction. Yes. So it's a transaction. Then a plan for spending one's money. If you have a plan to spend, let us say, simple thing, very simple thing. Capital. Capital is the plan for sending. Is it capital? A plan. Budget. Yes, correct. Budget is a plan to spend money. The next one. Amount of money gained or lost in an investment in relative to the amount of money invested usually represents as a percentage. It's a 12-letter word. What is the amount of money gained vis-a-vis the investment made? We saw it in the presentation also. Yeah? No. It is a rate of return, as simple as that. Rate of return, return on investment or rate of return, RPI, yeah, ROI. Then next. The chance that the rate of return will be different from the expectation. So you are expecting 5%, 7%, 20% rate of return, but the chance, there's a word for this chance, that it might be higher or it might be lesser. It's a simple 4-letter word. Risk. Perfect. Next, money left after expenses have been met from gross margin, gross profit. This is also very simple. Net profit. Perfect. Next, a financial institution licensed to receive deposit and provide financial services to the public. Very simple. It's only a 4-letter word. Bank. Perfect. An amount by which assets exceed liabilities. All your assets subtract all your liabilities. What is that amount? Assets minus liabilities. What is an asset? Furniture, fixtures, plant, land, etc. is your asset. Your your receivable is your asset. Your stock is your asset. What is your liability? That you have to pay to your suppliers, that you have to pay your bankers. All that is a liability. If you subtract your asset minus liability, you get something called as net worth. We have not taken this here, but then in the comprehensive program, we have what net worth is all about and how do you increase your net worth. It's more of a capital invested in your business. Discount offered by any business in the form of coupons or tickets, in the form of tickets that are redeemed at the time of purchase. These are nothing but coupons. I have already answered you here. So they give coupons and you can be redeemed on purchase. These are like, vouchers in the form of coupons. Expenses that are dependent on activity of business, like sale value, sale quantity, based on sales. Basically, expenses that are based on sales. What are those expenses called as? Thank you, Anita. Not an issue. Please. Thank you. You can revert to us through the group. Yeah. So these expenses are called as variable expenses. Now the last thing, a fee paid by the borrower to the lender for the use of borrowed money. I think borrower spelling is wrong. BORROR. Yes, interest. Perfect. So this is how you will understand what kind of concepts are in finance, and this is how we'll make it easy for the entire program. Okay. One thing you should understand is these financial concepts, when implemented in your business, only can give you results. So you make sure that whatever you learn, even from today's session, one thing that you have learned, if you take and implement in your business, you will see some difference. This program is scheduled basically on Jan 15, 16, 22nd and 23rd. Maybe we will reschedule or whatever it is, but currently it is scheduled on these dates. So Prabhu and Kaiza, you can first, I think Srinivas has shared a link through the form. So you can share your feedback on this, and you can also in the feedback say about your interest in joining the program. Absolutely fine. It was pleasure having you here. We and as Consulting&beyong have an experience of over 25 years, and we have been consulting South India's largest retailers, top businesses. We also have taken investors. I personally have taken care of loan funding, raising money of around 700 crores, and pitch deck, budget variance analysis, where we actually improved the expense spend, okay, by 12 percentage. We have turned around some businesses which are loss making. So we know that if we are not operationally efficient, then we need to see how we can improve, and we should be able to handle our financial commitments also well. So we have done business valuation, we have done pitch decks, so investor. So these are our credentials. You can write to us at capital@CNB India if you have further queries on how you will be taken through the program also. We will be ready to help you out. Thank you. Any queries, Kaiza, Prabhu?
It went on interesting. Thank you so much for making it this lively, and the whole session, you maintain the attention.
Thank you,
so that was interesting. Thank you.
Thank you, Prabhu. Thank you so
Thank
much.
you, Mr. Prabhu. If you can just share your feedback through the link, that will help us also.
Sure,
Thank you.
Srinivasan. Sure.
Thank you.
Thank you.
Have a nice day.
You too.
Yeah.
Thanks.
Thank you.
Thank you, Kezia.
Thank you, guys. Yeah.
Oh, I can leave right now.
Yeah.
Yes. Thank you,
We
Prabhu.
are
Thank
ending
you.
the meeting.
Thank you.
Yeah,
Sorry.
thank you.
Thank you.